Hello everyone, welcome to Preston Educational Academy. Do like, share and subscribe our channel. We're here with a new video. So let's begin. In this video, we are going to learn about direct tax and indirect tax. In the last video, we learned about income tax, what was the history of income tax in India, and what is the basic definition of income tax. Now, we are going to learn the two types of taxes which are broadly present in our country, that is the direct tax and the indirect tax. So, let's begin with it. First comes the direct tax. Now let's understand first what is a direct tax. Now here is a person and whatever income he has earned in that particular financial year or the earnings which he have earned, the tax is imposed on that. Now this tax has to be paid by this person. It has to be paid compulsory by him and it cannot be transferred to any other person. He has to pay his own tax whatever it has been levied. So direct tax is usually based on the incomes and the earnings which an individual make during a financial year. So let's see, a tax which is imposed by the government on a particular person where he cannot transfer the burden of the tax to any other person is known as direct tax. Direct tax is a type of tax where the incidence and the impart of the taxation falls on the same individual. That means it is levied on the same individual and also it is paid by that same individual and it cannot be transferred to anybody else. In direct tax, the burden can't be shifted by the taxpayer to someone else. He cannot shift this burden to anybody. Direct tax is paid to the government by the person on whom it is imposed. For example, income tax or professional tax. Income tax on whatever earnings we earn in a financial year, the tax is levied on that earnings and it's calculated on that. Now that amount of tax which has been calculated is paid by that individual. Now let's see what are the forms of direct tax we have. Now there are four types of direct taxes which we have: income tax, dividend tax, inheritance tax and estate tax. The income tax is a tax that is charged on the annual income of the individual or business earned in a financial year. Now this is charged on the annual income which an individual earns in a financial year. Now dividend tax is paid by the companies on the dividend paid to the shareholders. Now various companies have dividends in shares, right? Now those are paid to the shareholders. Now this tax is calculated on the dividend which is paid to them. This is an additional tax to the company's income tax. Now this comes under the professional tax and it is an additional tax to the company. Now next comes the inheritance tax. If any person receives from his or her ancestor, then he and she is liable to pay tax for such property or wealth which is imposed by the government. However, this type of tax is not functioning today. Now, inheritance tax is something which we get from our ancestors, the property, the wealth which we get from them has a family inheritance. On that particular wealth, the tax is being paid, and that tax is calculated on such wealth, but it's not functioning today in India. Now next comes the estate duty tax. Here this type of tax is charged on the whole property which is left by a deceased person. Now same like inheritance tax, when the person is deceased, his or her property would be transferred to their children further or their family members further. On that whole amount of property, the tax which is calculated is called as estate duty tax. But however, this is also not been functioning today in India. It is dissolved. These two taxes have been dissolved and they are no more functioning in India. But we can, the two tax which are functioning right now would be the income tax and the dividend tax. Dividend tax would come under the professional tax, and income tax is a tax which is charged on the annual income of an individual. So let's see the next one. Now comes the indirect tax, a tax which is imposed by the government on a particular person, but that person can transfer the burden of tax to another person, is known as indirect tax. Now here the tax is imposed on one particular person, but this person, he is transferring that tax amount, that person is transferring the tax amount to another person. Now this person would be paying that tax. The tax is imposed on this person, but it is paid by this person. He is transferring that tax to this person. Therefore, the taxpayers are not tax bearers in this case. The one who is paying the tax is not the tax bearer. That means the tax is imposed on somebody and it is paid by somebody. It is a kind of tax which is imposed on one person, but the burden is shifted to the another person. It is levied on the price of goods or services and collected by the middlemen in channels of distribution of goods, and it is remitted to the government's treasury. Now this kind of tax is, it's mostly present on goods and services which we use. We go to hotels, we buy things, we buy various things, right? Like lace or any other food items, eatable items, or cosmetics. On those things the tax is being levied and it is paid by some other person. It is basically levied on the price of goods and services and collected by the middlemen in the channels of distribution of goods, and it is remitted to the government's treasury. Indirect taxes are paid before the goods and services reach the taxpayers. They are usually paid before it is reaching to the original taxpayer. So now let's see what are the forms of indirect tax. Forms of indirect taxes. Excise duty. The excise duty is imposed by the government on the production of goods for home consumption. Generally, the central government collects at a special rate. Now, whatever goods which we use in our home, the excise duty is being levied on those type of goods. Taxes are paid on the production of those goods. Now next comes the value added tax. VAT is a common tax levied by the government at each point of exchange of goods from basic production to the final consumption. Now usually indirect taxes are paid from the starting phase, from the production of that good till the final consumption is made, till the final product of that good is made. The tax is levied at every level. Well, there are few further changes which are made in this tax. We'll be learning it in further videos. Now next is the custom duty tax. These taxes are popularly known as tariffs. They are generally imposed on exchange of goods and services between the countries. Now these taxes are usually imposed on the goods and services between the countries. When there is export and import from one country to another country, these type of taxes are imposed. Now next comes the sales tax. Sales tax is the tax on total sale of goods. The government imposes sales tax on the proportion or share of the retail price of the product at the time of sale. Now for this I can give you an example of cosmetics. Where we buy the cosmetics, you can see amount of tax percentage present on it. This tax percentage is paid by the person who is buying it. The buyer usually pays this tax. We don't even notice it. It is included with the MRP there, so we don't notice such kind of taxes, but yes, it is paid at the time of sale. So now let's see what are the basic differences between direct tax and indirect tax. Okay, differentiation between direct tax and indirect tax. The first one would be tax levied. Here direct taxes are usually imposed on the income of an individual. It is only imposed on an individual, but in indirect taxes it is imposed on the manufacturer or the seller of the goods. As I said, these in a direct tax is imposed on one particular person. It is paid by him, it is levied by him. But in indirect taxes, it can be transferred to various people. Now the indirect taxes also include the tax from the manufacturing level to the sales of that good or service, or both. Now next comes the tax liability. Tax bearer is aware of the tax liability as well as the time and amount of the tax. Now here the tax bearer, on the one on whom the tax is levied, indirect tax, the tax is levied on a particular individual, and that individual is aware of how much amount of tax he has to pay. Now I am an individual, I get certain amount of income every year, and I know what tax I have to pay to the government. But when it comes to the indirect taxes, he the final person who is going to pay the tax, he is not aware of the tax liabilities, and he's not aware of the amount as well. I gave you an example of the cosmetics products, right? We go and we buy it. So these products, any product which you buy, they include a final MRP. Now this MRP includes a tax percentage which we are not aware of, but we keep paying it thinking that it is the original MRP and it is included in it. The tax is included in this original MRP. So we are indirectly not aware of what tax we are being paid. But in direct tax, we know what amount of tax we have to pay. Now next comes the tax rate. Rise in tax rate leads to the falls in savings and investment. It facilitates inflation control. Now here the direct taxes are mostly levied on the income of an individual. So when an individual is paying a tax, then his savings might affect, because the tax percentage, the tax percentage which he is paying, it might be little high, due to which it might have a blockage in his investment or savings. It depends upon what income he is being earned and what amount of percentage it's being levied on his income. So in this particular direct tax, the savings and investment rate would be a little low. But when it comes to indirect taxes, rise in tax rate leads to fall in consumption and helps in increasing inflationary position in the economy. Now here, the more amount of consumption it is being made, the less amount of tax is being levied, and it helps in inflationary position in the economy. It's completely opposite when it comes to the indirect tax. Now next is the scope of taxes. Here in direct taxes, there is a wider scope of tax evasion. Why there is a wider scope of tax evasion? Now I have an income of X amount, and on that X amount the tax is being calculated, right? Now to avoid these taxes, we have few exemptions that are made. Now due to which my tax percentage pay would, I can reduce it. I can follow these exemptions and reduce the tax which I am paying to the government, or I can file for a tax return. Now those things we would be learning in the further videos, but in short I would say that there are chances where we can try avoiding paying the tax, or maybe there are few things where we can follow the exemptions and have a tax refund or something. I would be letting you know in the further videos about it. But for now, in direct taxes there is a wider scope of tax evasion, but there is no scope for tax evasion in the indirect tax. Now next comes the ability of the taxpayer. In direct taxes, the ability of the taxpayer is considered, resulting in fulfilling the principle of the equity. Now here, when a person is earning a certain amount of income, it is making sure that the person can pay the tax. He can pay the tax on time. So here there his ability to pay the tax is being considered. But in indirect taxes, we do not consider the ability of that taxpayer. Ability of the taxpayer is not considered, and hence the principle of equity is not followed. Here the tax consideration, the ability of the taxpayer is not considered. Now next comes the civic consciousness. Taxpayer possess the aspect of civic consciousness in direct taxes. Now what is civic consciousness? Now when I am paying tax, or when somebody else is paying tax, when we are paying tax, we know that we are paying tax for the betterment of our society. We pay tax, government uses our tax for the betterment of the society, for better improvement in the society, right? So we are well known that our tax is being used for the betterment of the society. But in indirect taxes, it does not possess this aspect. It is purely considered as particular tax which is being paid, and it does not consider the civic consciousness. People are not known whether their tax is being used for the betterment of the society, or even they are not aware when they are paying the tax. Now next comes the cost of collecting. In direct taxes, the cost of collecting by the government will be very high, but the cost of collecting in the indirect taxes would be very low. Now here the tax is calculated on a person's income, and it's individually calculated on it, so the tax rate would be high. Here the tax is calculated on the whole of the product, so the tax rate would be a little low when compared to the direct tax. So here are the major differences between direct tax and indirect taxes. These are the two main points. You can note it down. You can just write it down, these points in short, for your better understanding. So we'll be here with the next video in some time. Stay tuned. Thank you for watching. So thank you for watching our channel. Do like, share and subscribe. Please share this channel with your friends, to friends, seniors, juniors, everybody. We'll be loading a lot more videos on various subjects. You can also follow our Instagram handle, which is here. You can also suggest us with what subjects you want us to bring on, and we'll do that. Thank you so much for watching.